All right, so what if the IRS handed you a golden ticket, one that lets you dodge taxes going in, dodge taxes while it grows, and dodge taxes on the way out? Before you call your accountant screaming, yes, this is completely legal, and it's called a health savings account, an HSA. Most people walk right past this thing like it's a clearance rack at a store they think is too cheap for them. And that is genuinely one of the most expensive mistakes you can make with your paycheck. We're talking about a triple tax benefit in a world where the government usually finds 3 different ways to take your money, not spare it. Here's the catch though, and there's always a catch. You have to be enrolled in what's called a high-deductible health plan before you can even open one of these accounts. Think of it like a VIP lounge. The cover charge is a higher deductible, but once you're in, the open bar is absolutely tax-free. So what counts as high deductible in 2025? If you're flying solo, your deductible needs to be at least $1,550 per year. And for families, that number jumps to $3,300 per year. Yeah, those numbers sting a little, but stay with us because the math is about to flip on you hard. Once you qualify, individuals can contribute up to $4,300 in 2025, and families can stuff in up to $8,550. That's thousands of dollars per year sheltered from federal income tax before it even hits your checking account. Your future self is literally applauding right now. Now here's where the story gets almost absurdly generous. After age 65, you can use these funds for absolutely anything you want without penalty. Buy a boat, fund a road trip, pay for groceries. The HSA essentially shapeshifts into a second IRA once you hit that milestone birthday. The one asterisk, and we'd be doing you dirty if we skipped it, is that non-medical withdrawals after 65 are still subject to ordinary income tax, just like a traditional IRA. But before 65, if you pull money out for non-medical reasons, you're hit with that tax plus a 20% penalty, which is the financial equivalent of stepping on a Lego in the dark. Here's where the really nerdy but brilliant strategy comes in, and this is the part most people never hear about. Keep every single medical receipt from every out-of-pocket expense you pay after opening the account. There is no time limit on when you can reimburse yourself for those expenses. You could pay a doctor bill in 2025 and reimburse yourself in 2038, and the IRS has absolutely nothing to say about it. What this means in practice is that you can invest your HSA dollars aggressively for years. Yes, most HSA providers let you invest in index funds, let them grow completely tax-free, and then one day pull out a massive lump sum backed by a shoebox full of old medical receipts. You just built a stealth wealth account hiding inside a healthcare plan, and that is objectively hilarious and amazing at the same time. The historical lesson here is simple. The people who win with tax-advantaged accounts are rarely the smartest people in the room. They're the most consistent ones. Max it every year, invest it rather than letting it sit in cash, and treat it like the long game it is rather than a piggy bank for every copay. A lot of people hear high deductible and immediately panic, assuming they'll be financially exposed if something goes wrong medically. But here's the rational reframe. If you're relatively healthy and you're maxing an HSA, you're essentially self-insuring the gap with pre-tax dollars that are growing in the market, which is a dramatically better deal than overpaying for a low deductible plan you rarely use. The misconception that kills HSA adoption is that people think it's a use it or lose it account, like a flexible spending account. It is absolutely not. Your HSA balance rolls over every single year indefinitely, which means every unused dollar is a future dollar compounding quietly in the background while you go about your life. The philosophical bottom line is this: discipline beats intelligence almost every time in personal finance. And the HSA is one of those rare vehicles where the rules are stacked in your favor if you just show up consistently. Size your contributions properly, automate them, invest the balance, and let time do the embarrassingly heavy lifting. We genuinely love this account because it's one of the few corners of the tax code where the government basically said, here, take a break. And most people are too busy scrolling past it to notice. If you're already using an HSA, drop it in the comments. And if you're not, maybe today's the day that changes. And if you're ready to take the next step toward building real wealth, whether that's through real estate investing, home contracting projects, or connecting with the right lenders, check out our links in the description below and let's get you started.